If you've watched markets long enough, you'll learn something important. There are candles that move price, and there are candles that move psychology. Most green days are forgettable. Buyers push. Sellers respond. The market stays polite. But once in a while, a single session does something different. It doesn't negotiate. It doesn't test. It erases. Weeks of sideways action disappear. Its indecision vanishes. The prior balance stops mattering. That is what people mean when they say God candle, not magic. Not prophecy. Information. A God candle is the market shouting that the old structure just broke. And in silver, structure breaks, don't whisper. They snap. Silver is not a slow market. It is thin, reflexive, emotionally violent. It doesn't climb stairs. It jumps gaps. When leverage builds, liquidity thins, and urgency hits at the same time. Silver does not give second chances. Now let's strip this down professionally. A real phase change candle has 3 fingerprints. First, the body is massive relative to recent history, not 10% bigger. Not 20, multiple times larger than the average. Daily range. That tells you something new entered the auction. Second, volume explodes. Volume is the lie detector. A candle can be large because liquidity vanished. That's not bullish. But when range expansion and volume expansion happen together, participation increased. That means urgency, not absence. Third, the close matters more than the high. A God candle closes near the top of the range. Little upper wick, little rejection. Sellers had time. They failed. That is, control. Now here is the mistake most people make. They stare at the candle and forget what comes next. One candle is never the story. It is the alarm bell. What follows is the test. After a candle like this, the market enters a negotiation phase. It asks one question: are these prices acceptable? Acceptance is everything. Acceptance means price stays above the breakout zone. It does not collapse back into the old range. It does not need to go straight up. In fact, it rarely does. Strong markets pause. They digest. Weak markets give everything back. Time is the clue. If price dips and rebounds quickly, buyers are defending. If price dips and lingers, confidence is fading. Silver makes this harder. Because it loves traps, it will scare longs. It will bait shorts. That's why you must watch character, not just direction. Ask yourself, are pullbacks happening on lighter volume? Are rebounds closing strong? If yes, that is absorption. If sell-offs are heavy, wide, and close poorly, that is damage. Next, understand silver's plumbing. Paper trading dominates short-term pricing. Physical demand dominates reality. That is why spot can drop while premiums stay elevated. It's not a conspiracy, it's structure. But divergence matters. If physical remains tight while paper, price whipsaws. Eventually something gives either. Supply loosens, or price rises. A God candle that appears during physical stress is not the same as one during abundant supply. Now let's address the headline: $100 to $500 in 30 days. That phrase triggers emotion, so let's neutralize it. Price does extreme things, only through mechanics, not hope. For silver to sprint vertically, you need a chain reaction. Breakout into discovery. Short covering. Stop cascades. Option hedging. Liquidity thinning. Momentum. Chasing momentum. That feedback loop is how markets overshoot reality. But here is the danger. Silver never moves cleanly. God candles often come with violent checkouts. The market flushes leverage before the next leg, so the real message of a God candle is not buy anything. It is be more disciplined than usual. Track acceptance. Track volume, behavior. Respect volatility. If the market holds the new level, this candle may have been the opening shot. If it collapses back into the old range, it was a liquidity event. The next sessions tell the truth. And the people who survive silver rallies are not the loudest, they are the calmest. Now let's turn this into something actually useful. Because excitement without structure is how people lose money after a God candle. Professionals shift into confirmation mode, not prediction, confirmation. The first thing to watch is how price behaves around the old range. That old ceiling often becomes support. Does price respect it? Does it dip into that zone and bounce quickly? Or does it slice through and spend time below it? Time matters. A healthy breakout may test support. A failing breakout lives below it. Second, watch the quality of rebounds. Strong markets rebound easily, price lifts, closes improve. Buyers stay present. Weak markets rebound mechanically. Price spikes, stalls, closes poorly. Silver is violent intraday. The close is your anchor. Repeated weak closes are how breakouts fail. Third, watch volume through digestion. The breakout day should have massive volume. That's ignition. After that, you want to see selling volume shrink and buying volume reappear. On pushes. If selling volume keeps rising and buying fades, the candle may have been exhaustion. Fourth, watch volatility. Volatility rising is normal. What matters is structure inside volatility. Constructive volatility builds higher lows. Destructive volatility builds lower highs. If rebounds weaken over time, the market is tiring. Fifth, watch the gold to silver ratio. You don't worship ratios. You contextualize. Silver tends to outperform during speculative metals phases. If silver breaks out and the ratio compresses, that supports continuation. If the ratio expands while silver struggles, momentum may be fading. Now bring physical signals back in. You don't need perfect data. You watch symptoms, premiums, availability, delivery chatter, lease stress. Exchange rule noise. If spot falls, but physical stays tight, paper selling is dominating. If physical loosens quickly, demand may be cooling. With that, you can map 3 paths. Path 1, clean breakout. Silver digests above the zone. Builds support. Pushes higher methodically. Strong, not flashy. Path 2, shakeout. Silver dumps hard. Stops, get hit. Sentiment collapses. Then price reclaims fast. This destroys impatience and rewards discipline. Path 3, discovery sprint. Price stops being linear. Gaps, runs, pauses, runs again. Round numbers become magnets. This is where impossible targets get discussed. Not because they are guaranteed, because discovery overshoots. But every sprint carries crash risk, so you anchor on evidence, not fantasies. If dips are bought fast, volume supports advances, ratio compresses, and physical stress persists. The thesis strengthens. If those signals fade, you stop dreaming and protect capital. Silver rewards humility. Now let's talk about execution. Because silver does not reward ego. A God candle environment is where fortunes are made and accounts are destroyed. The difference is forced selling. If you trade with leverage, assume volatility can double overnight. Position size must shrink before volatility expands. Silver doesn't care about conviction. It cares about margin. Professionals stay smaller than they want. They survive to participate. Retail traders go big. They get stopped out. If you are holding physical or unlevered exposure, your advantage is time. You are not forced to sell. Your job is interpretation, not reaction. You watch structure. Is the breakout holding? Is acceptance building? Is physical stress persistent? Silver lives at the intersection of monetary narrative and industrial demand. Macro still matters. If liquidity tightens aggressively, silver can struggle. But phase change candles sometimes mark the moment when old macro linkages weaken. That's why you observe, not assume. The biggest shift to understand is reference points. In price discovery, reference points disappear. The chart stops offering comfortable entries. Pullbacks are shallow. Rallies are fast. The market searches for pain. Demand destruction does not happen at reasonable prices. It happens at prices that force behavior change. That's why late-stage silver rallies look insane. Now let's ground the $100, $500. Idea responsibly. Suts. A move would require reflexivity. Price rises, shorts cover. Covering pushes price. Momentum chases. Liquidity thins. Narrative feeds itself. That loop overshoots. But reflexivity also collapses fast, which is why discipline matters more than belief. Your decision points are simple. Does silver hold the breakout zone? What happens at $100? Does price reclaim it and treat it as support, or does it reject violently? How does volume behave during those tests? Is selling heavy, or is it absorbed? Do physical signals stay tight or loosen quickly? Do policy or exchange responses appear? Margins, limits, rules. Those do not appear when markets are calm. They appear when volatility threatens stability. If you ignore that possibility, you will misread sudden drops as betrayal. They are structure defending itself. The professional takeaway is simple. A God candle is not a lottery ticket. It is a regime change. Candidate, your edge is staying calm, while others chase and panic. If acceptance holds, if dips are bought, if ratio compresses, if physical stress persists, the setup supports continuation. If acceptance fails, if rebounds weaken, if structure breaks, you step back. That is not fear. That is professionalism. Silver may be entering a phase where moves that sound ridiculous become possible, but only those who respect volatility, structure, and risk get to participate. Everyone else becomes liquidity.